Have you had the dreaded brown envelope from NHS pensions? Have you heard of the annual allowance, but you're not very sure what it means and whether it's relevant or not to you? It's all coming up in this video. Hi folks, my name's Benjamin Mitchell. I'm the Money Scot. I'm a chartered financial planner, but I'm also the husband of a paediatrician. I know how complex personal finances can be for medics, and you're incredibly busy professionals and often just don't have the time to get on top of this stuff. So that's why I created this channel. So if you're enjoying the content, please like, subscribe and share it amongst all of your medic friends. So in today's video, we're talking about NHS pensions. But more specifically, we're talking about the annual allowance. Have you heard of this? If you haven't, we're going to cover it all in this episode. So let's talk about pensions generally. One of the main incentives we have to pay into a pension is we get tax relief when we pay into it. What does tax relief mean? Well, it's effectively free money. Rather than the money going to the tax man, instead it remains within your pension, eventually going into your pocket in the future. Now, we're incentivized to save into our pensions because of tax relief. Now, to avoid having too much of a good thing, there's a restriction on how much tax relief you and I can get in any one tax year. And this is the annual allowance. Think of the annual allowance as a cap on the amount of tax relief we can get into our pensions in any one tax year. And it's currently sitting at £60,000. Now, the devil in the detail and why tax relief and the annual allowance is so complex for NHS professionals is due to how the annual allowance is used up. So with traditional pensions, typical in the private sector, we pay into them and so do our employers. And depending upon how much we pay in terms of our gross contributions from us and our employer, this will use up part of the £60,000 annual allowance. What this means is if you have danger of breaching the annual allowance, and we'll come on to in a moment what that means in practice, then you can tail back your contribution so as to not exceed the annual allowance. So you've got great control and flexibility to not breach the £60,000 cap. Where this differs for NHS professionals and those who are members of the NHS pension scheme is you've got less control of how much of the annual allowance you're using up. And the reason for that, without going into the details of this, is that when you pay into the NHS pension, regardless of what your actual contributions are that are collected from your payslip and what NHS employers will be paying into the pension scheme, that's got nothing to do with how much annual allowance you're using up. And the way that the pension input amount is calculated will look at what your closing benefits were at the end of the tax year and contrast this with what your benefits were worth at the start of the tax year. So if you get a pensions annual benefit statement from the NHS pension scheme, you'll be able to see what the closing value was and what your opening value was. And the difference between these two is simply how much of your annual allowance you've used up. Now, why this is a problem for doctors particularly is that you don't necessarily have control over how much those benefits will grow. And the reason for that is there may be things out with your control that will cause a spike in the growth of benefits. It could be a pay award, it could be progression through your pay scale, it could be a backdated pay, clinical excellence award, whatever it might be, there may be a resultantly high increase in the value of your benefits that may then result in you breaching the annual allowance. And unlike with private pensions where you could control this and minimise your exposure to the annual allowance, with the NHS pension, it's out with your control. Now, the way that the tax charge works in practice is you pay what's called the annual allowance tax charge, how imaginative, and effectively this means you pay back the tax relief you've benefited on the way in. So if you're a higher rate taxpayer, you'll have claimed higher rate tax relief on your pension contributions, but if you exceed the annual allowance in any one tax year, you pay back the annual allowance you've benefited from in the form of an annual allowance tax charge. Following me so far? So if we understand now how you can possibly be breaching the annual allowance as a medical professional, you're probably wondering, okay, what is the annual allowance? So as I've said, it's currently £60,000. You can have £60,000 of pension input growth to the NHS pension in any one tax year. Now, this has actually been relaxed recently and was lower, sitting around about £40,000, but was increased by the Conservative government because of the pressures on senior NHS clinicians. So at the moment, the level is £60,000. Now this is what's called the standard annual allowance. It doesn't mean everybody has that annual allowance, because you need to be aware of something called the tapered annual allowance, just when you thought it couldn't get any more complicated. So if you're enjoying the video, do like and subscribe. So back to the tapered annual allowance. So the standard annual allowance is £60,000. But like I said, not everyone will have that as their annual allowance. It may be reduced on a scale from £60,000 down to £10,000 at the lowest level. Now, depending upon whether your annual allowance will be reduced downwards will depend upon what your other income levels look like. And there's two concepts you need to get your head around here: threshold income and your adjusted income. Depending upon if you exceed both of these levels, that will determine if tapering to your annual allowance applies. As I said, the annual allowance has been relaxed in the last couple of years to make it less likely that doctors will exceed their annual allowance. And similarly, there's been improvements to these other measures that I talked about in terms of your threshold income and your adjusted income, and these levels have also been pushed up, meaning less doctors have incomes that exceed these levels. Nonetheless, there may still be some clinicians out there who are affected by the tapered annual allowance, so let's go through how your threshold and adjusted incomes get calculated. So whether or not the tapered annual allowance will apply to you will depend upon your wider income package exceeding two different levels. The first check you need to do, which will determine whether you then need to move on to the second check, is to calculate your threshold income. Now, to do this, you need to bring all of your taxable income together, and including here not just your NHS salary, but also any other income you might have from private work, from rental income, dividend income. You're looking holistically at your wider financial arrangements here, not necessarily just your NHS income. Now, to avoid you having sacrificed some of the income you were entitled to through things like your salary sacrifice arrangements, you add back any employment income that you sacrificed, but then you make a deduction for any personal pension contributions you made to other pensions out there, such as private pensions, personal pensions. You deduct the gross level of contribution you paid into them, and that will resultantly reduce your threshold income. And this is why many doctors who engage in sensible financial planning can make strategic contributions to personal pension arrangements, bringing down their threshold income, so as a result they no longer are faced with a tapered annual allowance. Are you following me? So that's the benefit potentially of making private pension contributions away from your NHS pension, because it can help the wider picture and potentially remove the likelihood of you incurring tax charges in the form of the annual allowance tax charge. So far, we've worked out your threshold income. Now, if your threshold income exceeds £200,000, you then need to go on to work out what your adjusted income is. However, if you've got to stage one and your threshold income is below £200,000, the good news is you then don't need to do an adjusted income check, because you're not subject to the tapered annual allowance. But if you're above that £200,000 level, you need to move on and check your adjusted income. Let's calculate that now. So to work out your adjusted income, we start from our threshold income that we got to under step one. For argument's sake, let's say this was £210,000. And then you add on your pension input amount that I referred to earlier in the video. And if you remember, this was effectively the value of the growth in your pension benefits over the course of that tax year. This then gives you your adjusted income, and the threshold you need to be concerned about here is £260,000. So if you're above £260,000, that's when your annual allowance will start to get tapered down from the £60,000 level to £10,000. For every £2 of income you earn above £260,000 adjusted income, your annual allowance will get reduced by £1. If you have a total adjusted income of over £360,000, your tapered annual allowance will be reduced to the full minimum of £10,000. So what does this mean in practice? What it means is if your annual allowance is tapered, there's a greater chance that you will breach your annual allowance and resultantly have to pay a sizable tax charge. Whether or not you pay this out of your own pocket or determine whether you get it to be collected by the scheme, which is called Scheme Pays, is a matter for another video. But ideally, you want to avoid having to pay this tax charge, and there can be crazy scenarios that happen whereby senior clinicians pick up a few extra hours of work, and as a result they start to breach these levels and they reduce their annual allowance, and they're faced with hefty tax charges on a tiny bit of incremental added on income. So where possible, you want to avoid this. Now, the one thing that makes it slightly better is if in one tax year you were to breach the annual allowance, you can use carry forward from the preceding 3 tax years. So any unused annual allowance from the 3 preceding tax years can be carried forward to be offset against the annual allowance you've used in the current tax year. But take care, because these calculations can be complex and you need to often work back further than the preceding 3 tax years to work out if you have cumulative unused allowances that carry forward to the following tax years. It can become quite complex, so seek financial advice here if you are concerned. So there we have it. That is your overview of the annual allowance and how, as a senior clinician, you may be in risk of breaching it. But what takeaways can we take from today's video? Well, the annual allowance is a nasty tax charge, particularly for doctors, because you've got less control over whether or not you will breach it. Now, recognising that the presence of the annual allowance tax charge was discouraging many doctors from continuing to work, the previous Conservative government relaxed thresholds to make it less likely that you will breach these levels. Whereas previously more and more clinicians were exceeding their annual allowance, the position now is less likely that you will exceed the annual allowance, but there still is a number of clinicians, particularly higher earners, who will be faced with annual allowance tax charges. Hence what I referred to at the start of this video is you may have received the infamous brown envelope from NHS pensions, and it's not something you should ignore. The annual allowance is a nasty tax charge, but with good planning around it, you can avoid being subject to it completely. So don't underestimate the benefit of seeking professional advice on this. Similarly, and worryingly, quite often the benefit savings statements that you get from NHS will be based upon incorrect data. So you may wish to do an audit to make sure that the historical information that NHS pensions have for you is accurate. And finally, there's a lot of noise at the moment when it comes to NHS pensions around the 𝐓𝐢𝐦𝐞𝐬𝐭𝐚𝐦𝐩𝐬 remedy. I'll do a separate video on this in time, but this just makes the whole annual allowance picture even more complicated, because people who may not have incurred it previously may now have incurred it during what's called the remedy period from 2015 to 2022. But don't be concerned about that, I'll do a separate video on that. So there you have it, that's your debrief on the annual allowance and how it relates to the NHS pension scheme. If you've enjoyed this, please do leave a comment, and if you've any questions, leave them below and I'll get back to you as soon as I can. I realise it's incredibly complicated. It's something you don't really want to get your head around when you're working 80 hours a week, but understanding even the key points to this can become key to avoiding paying significant amounts of unnecessary annual allowance tax charges. The final thing I'll leave you with is that many people have become tempted to opt out of the NHS pension so as to avoid paying these hefty tax charges. However, there's many other benefits to remaining within the NHS pension scheme that you would forego if you were to opt out of the pension, and I'll leave a link at the end of this video to another video I did recently on this topic so you can understand the pros and cons of remaining in or opting out of the NHS pension. Thanks as always for listening, and I'll see you on the next video.